chat here anyway. So I'm going to put the chat all the way to the end of my screen. So I don't even see what's going on there in the chat. Okay. So let's start this from 2024. Yeah, I'd say we should do 2024, to be honest. We're in July now. Let's go till June. June has 30 days. 30 days in June. And we'll look for 20 dates. We don't want Fridays, we don't want Thursdays, we don't want Wednesdays. Sundays is good. Saturdays, no. Tuesday, Mondays, and Sundays is good. All right, let's get these dates. Ooh, okay, perfect. So we got all these dates over here. We got January, February, March, April, May, June. Okay, I'm only going to look at the chat for the dates. Chat, what do you think? June, May, April, February. I think we did a lot of them. Going once, going twice. May. Okay, May. Let's do May. My birthday. 19th May. Let's do 19th May. Good? 19th May. Good. March, 25th March. Okay. Okay. We can go March for March. We can go M for an M's, May, March. All right. So from here, we're going to choose 2024. Also, my birthday, 4th. Oh, nice. So we have May 19th. USD balance. We're gonna start with the big boy balance, which is gonna be 5,000. 5,000, believe it or not, is a big boy balance. And leverage 1 to 100. Spread variable is fine, no problem. History on the charts, we want to see 250, whatever. Standard chart period is going to be 15. Is this live? No, you are watching a recording, Jay. You are watching a recording, which was recorded in the past, but now we have AI to help us with any questions you have live. Welcome to technology. Total recall. Wow, amazing. Total recall in the mix. Okay, there we go. Ooh, we have a gap over here. So what we're going to do is we will go towards. Okay, so we will go towards pre-London. Open up calendar. Okay, don't need this. Open up sessions. We're going to go towards. Wait a minute. This is pre-London, right? Yeah, why that thing showing a gap? Okay, so we're going to move towards Tuesday. Yeah, we'll move towards Tuesday. We're going to skip all this. Yeah, we're going to skip all this and we're going to move towards Tuesday. So we can have, like, proper days that we want to take a look at. Boom, 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 boom. More. There we go. Pre-London is going to be right over here. All right. This is your pre-London session right over here. Now, let's do some analysis. Let's take a look at the daily time frame. Looking at the daily candles are coming down. We're coming bearish. No problem. The only thing is on the daily now, when we're doing, it's happening on the dates. I don't know why. Yeah, I know it's happening on the dates. But looking at the daily, we can identify that we are coming down to some sort of a support area right here. And at the same time, now we have to do some top-down analysis. So if we take a look at this right here, and then we got some resistance up there. We're going to take a look on the 4-hour time frame. Okay, so daily has this sort of like a support area. We're also creating some sort of a resistance as well. And that resistance is up over here on the 4-hour, 24.37. Let's take a look on the 1-hour time frame. Looking at the 1-hour time frame, seems like we are coming down. Now, as price is coming down to a support, we have to identify the link of the simulation was in the wrong chat. Oh, my bad. Yeah. Because I'm human. I'm human like you. Okay, so looking at the 1-hour time frame, we're coming down to a support. We also made this clean candles. Now, one thing I want to identify here for you guys is now this is a clean candle right over here, right? So this is clean candles coming down. And if we measure a resistance up over here, right here, if we put a resistance right there, and if you measure this range, this is a 16 pip range. What is this? 164 pip range, right? Wait, what's going on over here? This is 24.29. Hold on one sec. 24.29. 24. That's a $17 difference. So that's a 160, 170 pip range. Okay, perfect. 170, 150 pip range over here. Looking at the 30-minute time frame, we have created a resistance. We have a support form right over here. And we have this clean range. Now we have to ask ourselves, what is the bias? So if we look on the daily time frame, the bias on the daily time frame, if you look at it from the bottom going up, is we can say it's bullish, but since the daily candle is coming down, it seems like it's bearish at this point. Looking at the 4-hour time frame, 4-hour is just, consolidating whatever. There's no bias. I think a lot of time what traders do is they kind of like confuse themselves in, oh, I gotta know what the bias is. I gotta know what the bias is. If I can't find out what the bias is, I can't trade. That's not how things normally work, because you knowing if the bias is bullish or bearish is not gonna make you win a trade, to be honest, because I get these questions all the time. Oh, I don't know what the bias is. I can't win the trade. Now, looking at this, I don't care what the bias is. I don't actually care what the bias is, because if I'm looking at the 30-minute time frame, I could care less if the bias is bullish, if the bias is bearish. All I know is that if we can create some sort of a support, then price can continue to push up. Even though if the bias is bearish on the 4-hour or the daily or whatever the bias is, all I'm looking for is an opportunity, right? If we break below these wicks, then maybe we can continue to push down in this, 49, 50 pip, 14 pip range, 40. Yeah, 46 pip. This is a 46 pip range. Okay, gold has big ranges now. No problem. Yeah, right. So all we're doing now is waiting to see how the 30-minute candle is going to close, because ideally, if the 30-minute candle can close bullish, I think there's a very good probability that price can continue to push up. So we're just going to wait to see how this candle is going to close, and then we're going to make our decision, right? But buying if support is formed isn't counter trend without confirmation. No, because we have a range. Look, we have this clean 170 pip range. We have a clean 170 pip range. So if we have this range, then this means in this 170 pip range, if we form support, we can easily get some maybe like 20, like 20, 30 pips out of it. So that's basically what we have at this point. We have a range, and we just got to wait at this point. Let's take a look on the 15-minute time frame. Looking at the 15-minute time frame, the candle is still open. Let's speed it up here a little bit. Looking at the 30-minute time frame, we're looking at price to at least come up over here, 61, 63 pips. So we're just going to wait around in the 15-minute to see if we can create some sort of a structure, and then see if we can continue to push up or something. Let's speed it up here a little bit. All right. Based on a 30-minute, we should continue to pump up. Oh, let's speed it up here a little bit more, so the candles can start forming faster. Speed it up here more. Actually, let's forward this candle. Okay, we forward the candle, and 15-minute candle has formed like this. A weak bullish candle. Looking at the 30-minute is still open, but we are at a heavy support. The reason why it's difficult at this point. I wanted to say to take a sell, but it's difficult at this point. It's very difficult. The 15-minute candle is forming. I mean, this candle closed like a weak bullish candle. So it doesn't seem like there's a lot of volume for price to push up, to be honest. It doesn't seem like there's a lot of volume for price to push up. Even if we break below this low, you're looking at like a 40 pip move down, but it needs to break that low for a potential. There we go. For a potential impulse entry for price to continue to push down. Awesome. Perfect. So here we go. Impulse sells, looking at the 1 hour time frame, 1 hour is bearish. Looking at the 30 minute is bearish. But there are a lot of 30-minute candles coming down. Looking at the 15-minute has broken this low. So we're going to risk 1% and let's go for a impulse entry sell over here. Let's move this. Stop loss is going to go right over here, 22 pips. We're looking at TP to come down at this point, and we're going to accept this. All right. Okay, we're moving, and we're sort of trying to not move much. All right, let's bring up our trade panel over here. So we are in about seven pip profits. 7, 4, okay, 9, no problem. Very good, very good. All right, take a look at that. 17 pip profit at this point, $38 in profit. I think this was a very good impulse entry trade. It doesn't make sense for me. I would rather wait for resistance to be formed and broken to buy. Should I be more fluid? Yes. I think you should be focused on being more fluid, because looking at the way price is moving now, I think there's this was actually a very good indication for it to continue to push down at this point. So I think this was something. Let's take a look on the 30-minute time frame. Yeah, man. 30-minute time frame does look pretty good for price to continue. Oh, wow, look at that. 22 pips. It almost tapped into the TP. But so what we're going to do, since this is the first trade, I'm going to close everything right here and then done, right? So now let's take a look on the 30-minute here again. Initially, we had a support and we were saying that, okay, the 30-minute candle has like, we have like 160, 170 pip range. And if we can close bullish, we're going to take a buy. Good? Perfect. That's what we're looking at. And then you can say, okay, the 30-minute candles have been moving down for 1, 2, 3, 4 candles. But when we looked at the 15-minute was giving that impulse entry scenario where we broke below this. This is the perfect impulse entry. The perfect impulse entry. We broke below this low. We had like a 57 pip range. We got about 22 pips. Holy, look at that. Still moving over 60 pips. Would you disregard the previous bearish wick before the bullish? Yeah, so once we break below this low, this wick becomes a wick fill. It's something I've discussed in some of the webinars as well. That wick fill that wick then basically becomes a wick fill. Because this was pre-London, and pre-London, it kind of played out nicely. So yeah, switching back to the 30-minute time frame. 15-minute, yeah, this was good. I'm happy with this outcome. Very good. First trade in the simulation, win, 15-minute candle, creating a support. We have like a 26, 28 pip range, just whatever. Awesome. One trade in. So 30-minute candle has now formed a support. If we're breaking the high, I think there's a good probability for price to continue to push up. If it doesn't, it's okay, because we already took one trade and we won that trade. I think London Open is coming up. So let's wait for London Open and see what more trouble we can get into. That's what I like to say. That's what I like to call the trouble. What sort of a trouble we can get into? Is a major gap considered clean candles? Yes. A major gap is considered clean candles. Because a gap happens. So let me explain to you guys why a gap happens. So a gap happens when the market is closed, and over the weekend, something happens, right? So over the weekend, something happens, and over the weekend, price goes from what's this price? 24.16 to 24.36. And we don't see that. But when the market opens, the market realizes, oh, hey, wait a minute, gold is at 24.36. And that's the first candle you see. And that's why the gap happens. When things happen over the weekend, like let's say someone drops a bomb or someone does something or some political instability happens or and whatnot, so that's why all these gaps, they basically happen, so there's not much that we can do about it. Yeah. So this was good. Okay. The London Open is about to come up. And let's see what the London Open does over here. I noticed that price is making a resistance for London Open and then move down. Yeah, I mean, if we can create a resistance, I think that's going to be a good idea. But if you don't create a resistance, then what can we do? We can't do much if you don't create resistance. All right, there we go. Now take a look at this. Now, this is something very important. I want to stress upon is that, come on, deselect, man, trash ass sm5. Okay. Now, we have the support. We have created a resistance. This is not a sell because there's support right here. For price to continue to push down, it has to break below the support to continue to push down because this is a support. And at the same time, we are creating a resistance right over here. See this? This is a resistance. Now, if we break above this resistance, then you could have price to potentially continue to push up. So let's see how this 15-minute candle closes. 15-minute candle has closed. Oh, okay. Yeah, see that? We're still at this resistance area. We're still creating that resistance above this area. You got like a 40 pip range. Let's see the next 15-minute candle. 15-minute candle has closed bullish. Let's take a look on the 30-minute. 30-minute candle has also closed bullish over here. Now, since this is a Monday, well, it's Tuesday, but since we took one trade, I don't think we should risk another trade. Maybe if this was Wednesday or Thursday, then I'd be open to take another trade. So this one, we're just going to watch. We're just going to watch. We're just going to do, anticipation. We're just going to anticipate this candle to make a lower wick, break above the high, and then continue to push up. Break above the high, and then continue to push up. Wow, look at that, right? So we need to break above the high and then continue to push up. Let's take a look on the 15-minute. See, nothing. And also this 15-minute candle body is smaller than the previous one. So when the candle body is smaller than the previous one, there's a low probability. Look at that. We closed back in the range. We didn't break above the high. We're still back in the range. So you got to be very, very, very careful to choose how you're going to execute, right? So here he comes. The candle's about to close. Look at the time. See, the candle's about to close in 5 minutes. Is it a good idea? I mean, if this candle breaks above the high, is it a good idea to take a buy once we break above the high? Once we have like 5 minutes left to close? Ask yourself that question. No, absolutely not. Let's see here. Oh, look at that. We're breaking above the high. We got 3 minutes left. Ethan, no, it's not. Ethan, no, it's not. When I was a kid, I thought it was a good idea to ride my bicycle down a slope in an intersection, and then I got hit by a car. This true story, it happened. It's the same thing right over here. You're riding down the slope at the intersection, and the car is about to come in. And the car is about to come in is that the candle is about to close. Look at that. We're breaking above the high. Let's see how the candle closes. And the candle closes. Boom. Wow. Weak, bullish candle. What are you going to do over here? Nothing. All right. Let's move on to the next one. Let's move on to the next one over here. Wow, look at that. Oh, there we go. We broke up here now. We're trying to do some, but we already broke the range, so that next candle would be valid. Okay, that's fine, Ethan. That's fine. But my rule of thumb is when there's like 2-3 minutes left, we're breaking above the high, I'm not executing on that. That's my rule, something that I've learned over the past 7-8 years. So hopefully Yeah. Why did we take the green candle after support? Which green candle after support? We've moved way past that. I don't know which green candle after support you're talking about. I have no idea, Jay, what green candle you're actually talking about. My mind is fixated right over here, where we are now creating support. And in my mind, I'm thinking whether we can go up or not, while you're thinking about some green candle after support, which I don't know which one. After the red candle at support, bro, there's this candle after support, there's this candle after support. I can't read your mind, Jay. I'm sorry. I really apologize, but I can't read mine. No, there's no drawing. So we're going to move on to the next one. I'm sorry. All right, we ran the first support. This one, because we already took a trade. We already took a sell. So why would I want to risk? So why would I risk my profits for another trade? I don't want to do that. I'm just going to take one trade, win or loss, manage risk, and move on to the next day. That's what we will do. All right. Oh, wow. Very difficult session over here. Let's move on. Ooh, nothing happening. So the next pre-London is approaching right here. Boom. We have pre-London here now. Okay. New zones, new opportunities, new everything. Let's remove this. Let's take a look on the daily time frame. Looking at the daily time frame, daily candles are coming down, but the previous daily candle was kind of like, whatever. Let's take a look on the 4 hour. Oh, wow, look at that. This 4 hour candle body is bigger than the previous 4 hour candle. Man, using MetaTrader after using CTrader for months is so weird. It's weird to use MetaTrader. But the simulator on this is the best, to be honest. This MT5 simulator is actually very, very good. Okay, so looking at the 1 hour time frame now. The 1 hour candle is a big bearish candle right over here. And this bearish candle is possibly breaking these supports here as well. And we have a support here to the left-hand side. Let's take a look at the 30-minute time frame. On the 30-minute time frame, we have a huge volume push coming down. And as we're seeing this volume push coming down, we need to ask ourselves that, okay, we are in pre-London. So being in pre-London, does this mean there's a probability for price to continue pushing down or not? Is there a probability for price to continue pushing down or not? So we basically broke below the support. And yeah, let's take a look on the 15-minute here. Looking at the 15-minute, oh yeah, can't take a sell because we have already moved down like 80. We have moved 80 pips over here. 30-minute has moved, this one candle has moved 84 pips. So we gotta wait for some retracement. That's it. Just gotta wait for some sort of a retracement, and then we'll have to figure out what we can do. That's all we're waiting for. Let's forward the candle to the next 15-minute. 15-minute candle. Okay, look at that. 15-minute candle is creating some sort of a support in this clean range, but the 30-minute is still open. So we need to see how the 30-minute candle will close. That's the most important thing. We have to see how the 30-minute candle is going to close. That 15-minute isn't breaking the high there anyway. It would have been another story. Okay, so I want you guys to, it would have been another story if this 15-minute candle broke above the high, then we could say that, okay, maybe there's a possibility for price to move up, So we're just waiting. I think, oh, wow, look at that. Are we going to push down? What's happening here? Amigo, candle, how are you going to close? Let's slow the speed down here a little bit. We got 2 simulation minutes left, 1 simulation minutes left, and boom. Okay, there we go. Now, we have created support right over here, okay? Because we have this clean candle. Now, this clean candle will only make sense if this candle can break the high of the previous candle. If this candle can break the high of the previous candle, then I'm all for buys over here. No problem at all. I'm all for buys. But at the same time, now this is very important. At the same time, you look at this area here. If this candle breaks below the low, then there's a very good possibility we can continue down to fill these wicks over here. So that's all what we're kind of like, waiting for at the moment. If we break the high, we're looking at price to potentially continue push up, fill this range. If we break below the low, we're looking at price to, continue pushing down as an impulse. If you get it, I think that's going to be good. So we're going to have to be very, very careful over here. And, ooh, wow, look at that. Nothing happening. Nothing happening so far. Boom. Oh, look at that. Boom. Right? Right there. For counter trend, wouldn't you look for resistance to be broken, sir? No, I said what I said. If it breaks the high, it's a fake out, right? Yeah. If it breaks the high, it's a fake out, but we're breaking below the low. So now I think there's a very good, I mean, bro, come on. I mean, look, we're breaking below the low over here now. We're risking 1%, 1%. Easy, very easy. Look at that. 22 pip, 24, 25 pip stop. You're looking at price to, continue pushing down over here. Let's bring the TP, whatever. I don't want to use a TP. Yeah, I don't want to use a TP. Just a stop loss there. Could you wait for this candle to close? Could I wait for the candle to close? Sure, I can wait for the candle to close, but for what? But for what? Do I want to wait for the candle to close? Because we have learned, yeah, like you'll miss the move. Okay, so we're going to do two things. We're going to enter with two scenarios, right? One scenario is we're going to wait for the candle to close, and second scenario is that we are entering as we're breaking the low as an impulse entry. Good? We can do that. Okay, the 30-minute candle is breaking the low over there. Beautiful. Look at that. We're coming down. At the same time, we're waiting for the candle to close. Let's take a look on the 15-minute here. 15-minute has closed bearish. Very nice. And are we going to continue pushing down to this wick? But we're approaching this rejection area, and we don't know whether we will continue in this rejection area. 20 pips here, maybe close all, close full, because this is the second trade we're taking. Close full over here, because this is a rejection area here now. Oh, wow. Okay, we moved down. And at the same time, we are waiting for the candle to close. So now, since we were waiting for, let's forward this here. Okay, now, since we were waiting for the candle to close, we have missed the move. Okay, so now we have to measure this candle. So when we measure this candle, we're like, okay, this candle is 61 pip candle, and I was waiting for the candle to close. Now, what do I have to do? Now, I have to wait for price to maybe retrace, create resistance, and then continue to push down. Now, I gotta wait some more. Okay, now, and at the same point, now you're thinking that, okay, like, some people took the trade, some people took impulse entries. I don't understand, like, what the fuck's going on? Like, I don't know. Well, when you look at the webinars, you're like, okay, if we are breaking below this low and this body is smaller, then maybe I could have gotten these pips as price moved down, and I wouldn't have missed the trade because I was waiting for the candle to close. So maybe this strategy or this idea would have worked very well in my favor without me having to wait for the candle to close. Right, Guri? Guri, like I think I'm really messing up your name over there, but does that make sense? Because a lot of times what's going to happen is you're going to wait for the candle to close and you're going to miss the trades. That's going to happen. That used to happen to me in the beginning. I used to miss the trades. And then I would look back on the charts and then I would try to explain to myself, okay, I missed the trade, but some retards, they took the trade and they won. What could I have done to be in a position? Then I started to understand that, okay, maybe I could have taken a sell as we broke below the low, because if we're breaking below the low, that means there's a high probability for a candle to make a lower low and a lower high. Because if we're breaking below the low, then the candle should not break its own high, which is why the stop loss was above the high of the candle. Because if the candle would break its own high, then it's no longer a sell. So yeah, so these are rejection areas. I don't know whether price will continue to push down or not. We just don't know. Why do you not have your impulse entry at the body and not the lowest wick? No, it was this one here. The impulse entry is the wick of the previous candle right here. Not this one, the previous candle. Yeah, previous one. You have to go through the Impulse Entries webinars again. But but yeah, so I guess we're coming down to this rejection area or whatever. Okay. Let's move on to the next one. Let's see here what happens as we move towards the London session. Oh wow, barcodes. What the hell is happening over here? We're coming into New York Open now. Are we gonna get some relaxation on New York Open? Barcodes. Wow, weird, difficult. Yeah, nothing. Oh, we happen later on with news event. It's all right. Let's move on to the next one. Should I dive into Impulse Entry even though I'm building consistently kind of closing? Yes. I think you should keep in I think you should keep Impulse Entries in the back of your mind as an idea. That's what you should do. And wait for the candles to close. Because as you're going to wait for the candles to close, you're still going to have Impulse Entry idea in the back of your mind. And the time is going to come where you're going to be waiting for the candle to close. And then you're going to say to yourself, okay, I've been keeping Impulse Entry in the back of my mind. And I'm waiting for this candle to close, but man, this looks like a great impulse entry. And then you're going to anticipate the move. The beauty of anticipating a move is that you know where price is going to go without you executing on it. And when that happens, you're like, oh, wow, man, next time I'm definitely executing on this. And that's how you then get into the rhythm of, impulse entries and you start to see some sort of a real solid breakthrough. In the beginning, guys, they just go with impulse entries like quickly, yeah, you're gonna lose at that point. Oh, what's happening over here? All right. I'd appreciate if no one drew on the screen. Boom, boom, boom. Okay, let's take a look on the daily now. Looking at the daily candles have moved down. Awesome. So trend is bearish. Okay, whatever. Looking at the 4-hour, trend is bearish. I guess we have broken below the support here as well, and we're maybe coming down to this wick. I don't know. But the trend is bearish over here. Looking at the 1 hour has created a resistance, and we also broke below the support. We're going down, looking to the left-hand side. Let's see what we got on the left-hand side. Ooh, on the left-hand side, we have this area we can come into. We got clean range to the left-hand side. Looking at the 30-minute candles, 30-minute candles are coming down. Looking to the left-hand side, we have clean range. Beautiful. That's what I like, clean range. Around 115 pip range for price to move down. Beautiful. All right. Let's zoom in over here, see what's going on. Zooming in, and come on, man. Like this. And looks like we are creating a resistance right here. We have a resistance formed. Now, all we want to do is for next candle to maybe wick up and then continue to push it down. But before we talk about candles whipping up and moving down, if we break above 2374, right? If we break above 2374, there's a very good probability we can continue to push up. And that push up would be a counter trend trade. You guys understand? Because we are now trending down on all time frames. And if we do break above the area to push up, then that's going to be a counter trend trade. Let's look at 15-minute candles are basically creating a support over here, right? Because if you look on the 30-minute candles, we close with a little bit of a wick here at the bottom. But looking at the 15-minute, we are creating some sort of a support. So now this is a 45 pip range where we can do nothing in it. So we have to wait for price. Look at that. If we break below the low, would that be a good idea for price to move down? I don't know, because this basically rejecting right over here. So we don't know whether price is going to continue to push down or we're going to continue to push up. Looking at the 30-minute here now. Very, very, very difficult. Look at that, right? So this candle, we don't know how this candle is going to form. Looking at the 15-minute, we're just keeping an eye on this because the trend is bearish, right? We're only looking for buys maybe above 2373. That's it. We're only looking for buys above there. But right now, it just seems like we're just kind of like, in this range here, just stuck. This could have been a nice 11 pip buy, but we're not about that. We are not about that, son. We are going to wait. But at the same time, yeah, just gonna wait here for. Oh, look at that! Now we are breaking below the low over here. So as we are breaking below the lows over here, I think this is where now, if we're looking on the 30-minute candle, this gives us some sort of an opportunity. If we do break below this low, I think there's a very good probability where price can continue to push down. What do you guys think? Do you think that could be some sort of some sort of a workable idea if we break below this low, right? Oh, let's take a look on the 15-minute. So this 15-minute has just started. This 15-minute has just started. If this 15-minute candle breaks, no, we're not. Very tough. Yeah, wick rejection. Yeah, didn't move forward there. Very, very tough. Very, very tough at this point. We're just stuck in this range here now. We're moving towards London Open. So we're going to see what some sort of like an opportunity we get around London Open. But yeah, very tough at this point. Okay, the new 30-minute candle is about to start. We are clear. Yeah, see, one thing is now we're creating this clean 31 pip, 31. Yeah, I mean, if we create resistance here, I think that's going to be good. If we break above that area, then I think we can continue to push up. But right now, it's just waiting. This is just a waiting game at this point now. Just a waiting game here now. This candle is about to close. Let's forward this candle. Okay, we've closed bearish. Now, once we've closed bearish, resistance formed. This is like a 30 pip range. Do you think this is a good idea to take a sell over here? Like, I mean, the candle has closed bearish. Yeah, let's take a. Okay, if the next candle breaks below this low, this is a 27, 28 pip range. If the next candle breaks below the low, I think that would be good. See, this is the problem now. We are breaking the low in the first minute, right? Yeah. See, Mario, you're right. We're breaking the low in the first minute. So, no. Yeah, like in the first minute is a big no for me. I mean, yeah, look, yeah, that was a very good, quick decision we had to make. We're breaking up now. I mean, I don't know. We're just ranging at this point. Just straight range. Look at the 15-minute. Yeah, we're just ranging over here. I don't want to force any trade, but I don't know. We're just ranging at this point now. We're creating that support area. Candle's about to close. 3, 2, 1. Candle has closed. Yeah, nothing happening here now. We're just creating this minor support in this, 30 pip range. That's all what we're doing here. We're creating that minor support right over here in this 30 pip, 26, 29 pip range. We'll see if we can get like 10, 12 pips out of it. Yeah, I think that's going to be better. What's this? Can you explain 1 minute candle breaking, not take trade? Yeah. So when price breaks in the first minute, usually I'm not going to commit to a trade. Usually I'm not going to commit to a trade because more often than not, I've seen when we break below a low or we break above the high, there's a very high probability price will go the opposite way. That's something which I have seen personally. I have seen personally those things happening, so could we enter here, right? Yeah, we need to break below the low here. Right there. See that? 22. You can get like 10, 15 pips out of it. The stop is like 21, 22 pips, whatever. you know, this is sort of like forcing a trade, but it's a simulation. So we're just trying to prove a point. How long? I think like maybe 4 or 5 minutes, but that's something you get with experience as well. Prem, you know, that's something you get with experience as well. Not enough range. Yeah, it's not enough range, but so you get like, just for simulation purposes, I'm just showing that if we're breaking below the low, and if this range was, let's say, like a 35 pip range, then yeah, that would make sense. But just for simulation purposes, I mean, even if we lose this, is no, oh, well, okay. Well, okay, so since we're rejecting over here and I'm not too sure, where's that trade panel? I'm going to close 50% because I don't want to take a full loss here, right? Look at that. Wow. Just managing risk over here, boys. Nothing. Yeah, just managing risk, to be honest. Managing risk. Okay. So I got a question over here. The probability for price to go up is higher or to go down is higher. Just by looking at this. Just only by looking at this, the probability of price to go, yeah, down is higher, you know? So this is where we can add risk back to the trade now, right? We're going to add risk back to the trade. So since we won some trades, we're going to add a little bit more risk back to the trade. Wow, this looks so sick. So the reason why I'm not going to put my stop loss above the candle, okay? Listen to this very carefully. The reason why I'm not going to put my stop loss above the candle is because this candle already broke and closed below support, right? So once this candle broke and closed below support, this candle has no business retracing back in the range. Because if this candle retraces back in the range, then there's a probability it may not even go down. So it has no business retracing back in the range. Someone put my stop somewhere in the middle of this range right over here. And that's it. And then once we continue down towards, 2368, we can call it a day. Wow, amazing, right? Wow, this is so amazing that this setup showed up where we can add risk back to the trade. Okay, we're coming down over here now. The big small position is there. This we will close around, let's say, 70%. And the reason why I'm closing partials on this trade is because I have won a trade. Well, we have won a trade on Tuesday and Wednesday. Okay, we won a trade on Tuesday and Wednesday. So I'm closing partials on this trade. If I'm not going to close partials on Monday, Tuesday, right? I'm only going to close partials if I'm in profits for the week. If I'm in profits for the week, only then I'm going to close partials. Move stops to break even and let the rest run. Yeah, this was good. Impulse entry, risk management, adding risk back to the trade. I mean, beautiful. Beautiful. Wow, where the hell is this thing going over here? Are we gonna go lower? Oh, okay. Runners up. Wow, what the hell's going on over here? Nice. Very nice. Runners are moving beautifully. Beautiful, beautiful. The runners are moving actually very nicely. Let's close one of the runners over here. Yeah, so this setup, we learned a lot of things with this setup. We learned impulse entry, then we learned managing risk, and then we learned adding risk back to the trade, securing some partials and letting the rest run. Man, really like this MT5 simulator. It's something you can't do on a C trader simulator. Yeah, this is very good. Very good. Very good. Can you explain risk management again? No, I already explained it, risk management again. I entered the trade. I'm going to close this one right over here as well. So wow, this thing is still moving over here. So I entered the trade, price retraced back in the range, and I closed 50% because I didn't want to take a full loss. So that's why I closed the trade there, in partial risk. Okay, let's move on to the next one, shall we? This was actually very good for even learning purposes. This was excellent. Wow, this thing moved like 30, 40 more pips after I closed. Wild. Are we going to have some sort of a retracement? Damn, where is it going? Looking at the 1 hour, zoom out. Oh, wow, we're coming up to this rejection area right there. Okay, let's do something crazy. 0.5, 0.5, nothing much. Let's forward the candle. Oh, okay. This is something I would not do. That's why small risk. Okay, very good. Anyway, don't take that. Please don't do that. Yeah, whatever. So so if price closed below the range, ideal stop loss will be somewhere in that range. That's correct. But you have to see that happen multiple times. Just because I did it once, or if I've done it in my live streams, don't think it's always going to be the case. You have to gain experience watching that happen yourself, and then create your own bias around that. That's the most important thing that you have to do. All right, so we're retracing. Wow. Oh, what's happening over here? Are we creating resistance? Are we creating resistance for price to push down? This 30-minute candle is still open though. Are we creating resistance here for price to push down? Let's see here. The candle is about to close. Let's forward this candle. Okay, let's take a look on the 15-minute. Wow, look at that. We are creating resistance for price to move down, for price to move bearish. So if we take a sell over here, because look, we move down, retrace, resistance formed, right over here, resistance formed, boom, resistance formed. If we take a sell, the stop loss is 31 pips stop loss. It's a big stop loss. So maybe having the stop loss based on a 15-minute would make sense. 14, 15 pip stop, right? 1% risk, sell. Stop loss goes above the 15-minute candle right here. Boom, got to make some room for the spread. Yeah, man, like on the 30-minute, it's big. Why wait for the low to break? Why wait for the low to break? Like, this is a very simple analysis. Why, like, are you not confident? So you want the low to break? This is something I explained in the webinar we posted, I think 2 weeks ago, about waiting for candle closes versus impulse entries. Yeah, man, it's like a 10. Yeah, look at that. It's a 10 pip wick. It's a 10 pip wick right there. We're 16, 17 pips in profit. Beautiful. Close 90%. And yeah, and then let the rest run. Oh, nice. We are actually touching the low. So see, now just let the next run. That's how I get big moves. Just let close 90% and leave 10% run. Beautiful. Close this. If this came up to entry, would you close 50%? If it came up to entry, I'd close 50%. If it would have created the wick and breaks, yeah. See, I don't talk about what if scenarios, because what if, like a lot of what ifs can take place. Oh, okay. All right, let's move on to the next one. Oh, wow. Look at that. We moved down over here. Okay, there we go. Pre-London session over here. Pre-London session, we are back at it again. Let's take a look on the daily time frame. Daily candles are pushing down. Sir, do take note of the time. Cheers. Yeah, I am taking note of the time. Cheers. Cheers, mate. Cheers. Cheers. Okay, daily is coming down. Now, one interesting thing about the daily is this daily candle hasn't really made a top wick. So maybe on the smaller time frames, We can push up to make a top wick. You can say that trend is bearish. We agree with that. Looking at the 4 hour, we are coming down. We maybe have this support area we can push down to, but only the smaller time frames can tell us where price will go. Looking at the 1 hour time frame, we are consolidating. We are creating a resistance. We are creating a support right here. Looking at the 30-minute, we have a support formed, and we have this resistance formed right here. And if you measure this range, this is a, wow, this is a 100 pip range over here. Beautiful. This is a 100 pip range. If we break above 2335, we have this 93 pip range for price to move up. If we break below this area, 2325, looking to the left-hand side, we have, still 70, still pretty good range for price to move. Still have pretty good range for price to move. So yeah, let's take a look on the 15-minute over here now. Because if we create a resistance now, since this is a very big range, we are forced to look at the 15-minute, right? I mean, if we create resistance, this is the 53, 54 pip range. Looking at the 30-minute time frame, we're just stuck in this area. So we'll have to wait to see how price basically plays out over here. Yeah. Just waiting here now. Waiting. I think a good idea would be to see if we can create, I mean, how big is this range over here? It's like a 34, 35 pip range here as well. Not bad, not bad, not bad at all. Let's see how the candle closes. 15-minute. Okay, 15-minute has closed bearish. Looking at the 30-minute. 30-minute is still open. Do you guys want to risk sells or wait for the 30-minute to close? Yeah, right? I'd rather wait for the 30-minute to close. Yeah, you're right. Like it's also Friday, so yeah, I think it's going to be better. Oh, we're moving up. All right, let's see how this candle closes. 15-minute candle is ranging. Looking at the 30-minute, 30-minute candle is now creating a resistance, but this body is smaller than the wick. So whenever you have a candle closing like this, when you have the body that's smaller than the wick, that basically indicates that we are, it's a rejection candle right over here. Because look, the wick of the wick is 15 pips, and the body is like 7 pips. So this is basically a rejection candle. Can't take a sell. 15-minute is also ranging here. I mean, if we break below the low, maybe we could look at something, but yeah, based on a 30-minute, it's very difficult. Yeah, it's middle of a zone too. It's not the best scenario in the middle of a zone. Okay, so I mean, seems like we can go up. One thing that was going through my mind is, which I'm gonna just say it out loud. Before this candle moved up, I was hoping this candle can break below the low in the 15-minute, and we can take an impulse entry for price to move down. The first trade we took in the simulation, but for that to happen, this candle, it shouldn't have retraced this much. For a perfect impulse entry, this candle should retrace maybe a little bit and then break the low for it to move down so that we can have a stop loss above the candle. But since it has moved up so much, and if it breaks the low, the stop will be too big. So it's not an ideal impulse entry. An ideal impulse entry is that the trade candle, like this one right here, shouldn't retrace as much. So the recording is going to be in the database as well, so you can rewatch that section. Well, this section. Okay. Yeah, we're just doing nothing over here. Just let's wait for the 30-minute candle. Okay, look at that. 30-minute candle is closing bullish. I mean, if we can break above this high, how big is this range? 35, 34 pip range. Let's take a look on the 1 hour. Yeah, tough, very tough, very tough. We can go back for a bank. You can go M for an M. Oh, we are breaking above the high over here. If we do continue to break above the high, I think that's a very good probability. We can continue up in this case. Let's see here. See, we're breaking above the high here. I'm not so certain, but just for the simulation session scenario, we can risk less. Oh, not 1.25, 0.25. 0.25, makes sense. I mean, we have clean range, 30 pip range, 30 pip range over here. Oh, yeah, look at that. 1 hour high is also being broken. Looking at the 4 hours, whatever. So even though the trend can be heavy bearish, when you look at the smaller time frames, you can get some ideas about, like counter trend moves. I mean, okay, so if we're trying to go up over here, stop loss is going to be below this candle, 49 pips, 15 pips here. And like, if you go up, awesome. Let's take a look at the trade panel over here. Okay, not bad. We are trying to make a move here. Oh, look at that. Almost like, 14 pips into it. Let's put stops at break even, and then, yeah, it's Friday. You don't bear in mind the 4 hour candle. I see you don't take a look at it. Nope, I don't. I don't look at the 4 hour because the 30-minute and the 1 hour candles are going to create the overall 4 hour and the 1 hour the 4 hour and the daily candles, which is why I'm not so fixated on the 4 hour. Because you got to understand the smaller time frame candles are going to create the overall higher time frame candles. So even if the high time frame candle can say we're going down, but looking at the smaller time frame, you may get that 10, 15, 20 pip opportunity in the opposite direction, which is something like, we're getting over here, I guess. Oh, nice. This candle moved up over here, rejecting that resistance so we can close 50%. Yeah, I think this was a very good idea here that we executed on. Beautiful. Beautiful. All right, close this. Oh, let's close all over here. Let's forward this candle. This candle close like this. What are we in? We are in sessions. We are in London Open right over here. Okay. Okay. Oh, do you guys see what I see over here? Where is this? We got this resistance. Impulse. Yeah, break of the high. Impulse. If the next candle breaks the high. If the next, yeah, right. But it's happening in the first few seconds, man. This is what I don't like. It's happening in the first few seconds. This is where people say, oh, Raja says first few seconds, but yeah, just for the sake of, I'm just gonna do. See, that's what I say. Like this, all all of this comes with experience, right? All of this comes with experience. In the previous trade, we were breaking in the first few seconds, but it wasn't that picture perfect. But right over here, the impulse entry scenario is picture perfect, but we're breaking in the first few seconds. This is where once you see this things happen over and over and over and over again, you start to create a bias. You start to create a bias. You're like, yeah, I said don't execute in the first few seconds, but then again, sometimes you can, and then you can say, well, how do you know when you can and when you can't? The answer is you just got to watch it happen maybe like 20 times, 15 to 20 times. You just got to see it happen. So I'm going to go with lower risk over here because you're breaking in the first few seconds, stop loss goes down over here. I mean, this is the perfect impulse entry scenario. Experience. All that just boils down to experience. So don't come around to me later saying, oh, Raja, but you said this. Raja does things opposite to what he says. No, it all comes down to experience. Yeah, I mean, if it comes back down in the range, we can manage risk, but Let's see how this candle closes. We got clean range there as well. Oh, wow, very nice. Okay, beautiful. Yeah, we moved up, 27, 25, 27 pips, whatever, close this trade. But yeah, like at the end of the day, it all comes down to experience. Experience is something that will stay with you for a long time, so we gotta keep that in mind. But anyway, guys, thank you. Best simulation session. Yeah, I think this was a very, very good simulation session. I think this was a very, very good simulation session. Um, I thank you for joining. We made about $470, around 9%. This will be in the database later on here today. Oh, you want to see the history? Let's see the history right here. This is the history right here. Let's take a look at closed trades. I'll see if I can share this as well, but no promises. Statistics. Yeah, turned out to be pretty good. Profit target, largest trade. Zero loss. Zero loss, yeah, unfortunately, so far. When there's a clean range on the left-hand side, will the price respect after clean range resistance or support? Yes, that's correct. Export statistics to Excel. Statistics. 7 July. Yes, boot camp. It's not a boot camp. It's a crash course. We will teach some basics. Anyway, take care, guys. We'll see you guys on Monday. Monday. Adios.